All right, let's see. Good afternoon. So today is what? Today is February 10th, 2021, and welcome to Wall Street Wednesday. So as usual, I give people a few minutes to log in and catch on. Log in. Market just closed. For those who are just coming on board, again, if you have questions, start putting your questions up. And what I'll do is, as I go through today, I'll answer your questions best I can. So, but put your questions up. We'll talk about them. I'll answer them, and we'll go from there. I'll give people a few more minutes. So just chat in general. Been an interesting market again. I think that what's the word I want to look for? The adrenaline rush, the high rush that the market got off of GameStop, I think is finally worn off. But at the same time, I also know that you guys in the market's looking for the next GameStop or the next one to run. So I'll talk about that a little bit. And again, another thing I want to talk about, I've had a couple people email me this, and they just clarity. So let me give you some clarity. When the brokerage firms are in business to handle your trades, facilitate your trades, but they're not in the business of handling your risk. So in other words, they make a fee, a commission for handling your trades. Robinhood still makes money on your trades. The reason why Robinhood could offer you to trade with them for free is because they've been selling that data. They've been selling the trades to Goldman Sachs or someone like Goldman Sachs since they came in business. I mean, it's a commonly done thing where these firms will sell their trades to Goldman Sachs. Also, as some of you guys know, that the New York Stock Exchange started offering high-frequency trading to anyone that wanted to buy it. Now, at the time when they originally offered it, the only one that was buying it was Goldman. Goldman cleaned up on it. The rest of the firms at that point said, we need to actually do this, and they all jumped in and started doing high-frequency trading and buying that data from the exchange. And as you know, when competition shows up, margins start to squeeze. So that's what you're looking at there. But the thing I want to address is, because I'm getting a lot of some people are saying that we screw the hedge funds and it's not fair what they did to us, not letting us trade and closing it down. I'm going to make the comment that if this was my brokerage firm, the way GameStop was trading, I would have shut down trading in GameStop, because I guess you guys don't understand, GameStop could have took out a brokerage firm. Not only just you personally, but could have took out the whole firm. Bear Stearns was taken out because they could not meet margin requirements. All right, that's why Bear Stearns went under. They couldn't meet margin requirements when a hedge fund that Bear Stearns had turned and went negative. It was over levered. Things went against them. They couldn't meet the margin call. They were under levered. They didn't have the cash liquidity. And so the SEC and the Federal Reserve and everyone else basically came in and said, we got to shut you down. That's what the brokerage firms were afraid about with GameStop. For those who understand margin, understand this. Margin cuts two ways. And when that stock started to go down, which it did, and a lot of you knew it was, the people that were long on margin, now they were getting squeezed. And the deal is, if the stock falls so fast, they don't have time to call you up and say, Mr. Milligan, you got a margin call, send in more money. Especially if it goes negative. What I mean by negative is you lose your investment, and some people have this happen to, and you end up owing more money to the brokerage firm. And if enough clients that happens to, the brokerage firm is going to be out of business because they can't meet the margin call. They don't have the liquidity. That's why they all said 100%, no more margin, 100%, or we're not trading it at all. They were doing that to protect themselves. And again, I've heard people say, well, the hedge funds kind of manipulated Robinhood and TD Ameritrade. Trust me on this. There's not a legitimate large hedge fund. When I say large hedge fund, over 200, 300 million that's trading with TD Ameritrade. I can guarantee it. You might have a small hedge fund with a couple of $100,000 there, a couple of million in there, but the large funds are not trading through TD Ameritrade, nor are they trading through Robinhood. All right, so don't think that by squeezing out GameStop that you stuck it to the hedge funds, or by hammering Robin or anything else that you stuck it to that. That's the furthest thing from the truth. All right, So with that said, GameStop, again, as you guys know, it came in. It's going to come in. Again, what's happening right now is, and let me explain this, because now the Reddit platform has moved on to some marijuana stocks. So let me explain what's going on here. When it came to GameStop, they figured out that they had a huge short position. A couple things that made for a perfect storm. Low price stock, all right, really low price stock, which allowed the people to actually take a position before they started to tout it, before they started to drive it. So you had a low price stock that had literally, when I looked, 7 days of just pure buying to cover a short. And that's what caused the short squeeze. So what happens is when you and I start buying and drove that price up, the short squeeze came. These guys were forced to actually either do two things, put more money in or pay up for the stock. Some of them might have put more money in, but when the stock started moving up to the $100, $200 level, trust me, they weren't putting more money in. They were trying to figure out how to close that short position. Now, with all that said, perfect storm, drove the price up, made money. The ones that get caught are the ones that are last holding, are the ones that think this is actually an investment, not speculation, because this is pure speculation. So now what they're doing is they moved on to the next game, the next round. The next round is, from what I've just been hearing, is they're going after the the marijuana stocks. Was it TLRY? TLRY was up today. Up the past 2 days. So basically it ran from about $29, $30 a share. Today it closed at 64 off a high of about 67. So they're running it again. If you decide to play that game with these guys, understand you're a speculator now. You are trading. There's no investing in here. None. Don't think about the word investing. Don't go look up fundamentals. Don't worry about earnings. That's not in play right now. What's in play is the whole herd mentality. So the only analogy I can give you is that there's a very popular artist who's coming to town for a concert. And you guys know there's only so many tickets available. And there's a rush to get tickets. And then as you know, after those tickets are purchased, in the aftermarket, they drive the price up even higher, saying, look, I know this ticket, front row is $100, but right now, based on demand, I'll sell it to you for $2,000. All right, that's what we saw happen. Once the concert is over, what's those tickets worth? Nothing. Once they were done with GameStop, the stock is going to fall back to where it should be trading, is back down in the single digits. All right, it's just that simple. All right, that's the way this works. So all I'm saying to you is, if you get involved in these type of stocks, understand what it is you're doing. All right? It's almost like you got a pool cue out and you're at the pool table and understand that they're playing billiards and you're trying to shoot pool. All right? They're playing a different game. You're playing a different game. This is speculation. So with that said, TLRY is the next one. They're pushing it. Volume's up. They pushed it. You got a bunch of gaps. Once they stop pushing it, once the herd stops, again, it's going to fall down. You can make money on the short side, but again, whatever you guys do, just be nimble, be quick, and unless you've got a huge profit, I mean huge, I'm not talking about a 5 or 10%, you're talking about a 60, 70% profit, I wouldn't take anything home overnight. I just wouldn't do it. Not on this stuff. All right, so that was me addressing this speculation. And again, this is Milligan. I have Professor Milligan, Money Mike. I have no problem with short-term trading, with short-term speculation. Got none. As I said to you guys, I built my first, I'm not going to say how much, but my first initial push money in my pocket as a trader came from me trading, short-term trading. All right, no question. Getting a stock, getting my 5, 10 points in a day or two, and then, taking that, hitting the streets and going. All right. For the marijuana stocks, does the catalyst of weed being decriminalized play a role? No question. None. But let me explain what I mean by that. A few years back when they started talking about legalizing marijuana, and then Colorado, I shouldn't say Denver, the state of Colorado did, and they talked about the revenue they were generating. At that point, and I know a lot of people thought the same thing, this reminded us of prohibition. And that means nothing more. And for those who don't know, the Kennedy family's wealth came from the fact that their great-great-grandfather was a bootlegger. And once that alcohol was legalized or decriminalized, prohibition came about, his operation went from being a legal operation to a legal operation, and that's how he made his wealth. The Brofman family, the same exact story, except they were up in Canada. So all I'm saying to you is that I truly believe that the marijuana industry is here to stay. I believe that it's being decriminalized. I believe it's the catalyst that's going to drive value. I believe it's the thing that's going to drive the value of these stocks. Now, the question that you have to ask yourself is, which ones are going to make the turn? I believe that the small retail shops in our neighborhoods are going to be gone unless they can specialize. And what I mean by specialize is have some type of special strand, something that no one else is offering. Because what we're going to see now is that once this decriminalization is over, the marijuana industry is going to be mainstream and corporate America is going to move into it. And when corporate America moves into it, they're going to basically just buy market share. They're going to dominate by market share, and the smaller firms are going to have to figure it out. One of the stocks I had looked at was Miracle Grow. God, forgot that quick. I looked at that because, and I looked at a couple other companies that supply the lights, the fertilizer, the whole 9 yards to the industry. I know here in California, we had a problem, and that was they grew so much marijuana that at one point they couldn't give it away. They had grown that much. And the problem that they had was they were growing it, but it was illegal for them to ship it around to other places in the country because certain states it was illegal and you couldn't transport it. That's all changed. I believe it's a catalyst. I believe marijuana is here to stay. I think the biggest challenge you're going to find is finding the right stock to invest in for an investment. For trading, go ahead and trade them. Trade them. Momentum traders. Just be ready to pull the trigger. Be really quick on that. All right. So you asked me about marijuana stocks. I don't think marijuana stocks are in a bubble. Now, TLRY might be in a bubble. That's a marijuana stock. But when I say marijuana stocks, I'm talking about the sector, the industry. I don't think that marijuana industry is in a bubble. Not even close. But you can have stocks inside the industry, which TLRY now is in a bubble. You can't push something from $28 to $63 and not expect it to be in a bubble with gaps on volume. All right, now I'm not sure what the volume is, but I'm looking at the volume. The volume looks like about 10 times average daily volume. Yeah, I mean, it's up there. So I would expect that. Again, I don't expect the bubble to be everywhere. I expect the bubble to be there. All right, let me jump real quick. I'm looking at the questions. I think I answered all the questions so far. So let me jump real quick. Take up my pad. So one thing I want to talk about, again, real quick. Let me give you my commodity update on what I see. Some things are turning very interesting. I'm going to read the long side. I'm going to read the longs. These are all fundamental longs. I'm going to mention one or two that seem to be breaking out, but these are things that I think are long, that eventually fundamentally they're long. Feeder cattle. The U.S. dollar. I still think we should be long the U.S. dollar. I know it had a little bounce. It's turned and head south again, but again, the U.S. dollar. The 30-year Treasury bond. Now, if you're going long the 30-year Treasury bond, that means you think prices go up, which I do, which means I think yields go down. So I'm looking for the 30-year Treasury bond yields to come down and price to go up. The other one that I believe is long, and I think rates are going to go even lower on this, believe it or not, is the 30-day Fed funds. The 30-day Fed funds, fundamentally, you should see the amount of size that is actually playing that market for that security to go higher. So that's what I see. Now, on the short side, let me read some, and I'm going to get to one that's really interesting. And that is, let's see, on the short side, the Aussie dollar, Australian dollar. Short, high-grade copper. Short, live cattle. These are all shorts. the grains, all the grains look weak, but corn has started to break down. Corn has traded below its 10-day moving average. Corn is actually in a short position now. So fundamentally, it's a short. Technically, it looks like there's a reversal coming. It actually broke below its 10-day moving average. All right, the other one I want to bring up is, who is it? On the long side, I didn't bring up palladium. Palladium's interesting. Palladium's in a trading range between 2,200 and 2,500. So again, you can go long this trading range. Look for it to break through the 2,500, which would take it to its new high or near-term high. If it doesn't break through the 25, then it's going to go back and test that 2,200. But fundamentally, it's in the trading range, and I believe it's going to break out. Fundamentally, I got a breakout. Technically, it's in the trading range, and I think it's going to break out there. Corn, on the other hand, I'd mentioned, and the other one I wanted to mention was the New Zealand dollars in the trading range between 71.40 and 72.48. So basically, you're looking at almost a full penny in the range between the two. And again, I think that the New Zealand dollar is a short. So again, it's in that trading range. It breaks that 71.40. It should go down further. So that's what I would do with those. And again, anybody have any question on those, you can DM me directly, ask me, so forth and so on. That's my commodities update. Now, the other thing I want to bring up real quick, and this coming up, I told you guys I believe the IPO market is going to heat up. I think it's heating up right now, or last week I had mentioned I was long Upstart and I was short RevMed, RVMD. Well, I got squeezed out of my RevMed, which, is part of the game. So I got squeezed out of RevMed. So I'm typing the symbols. But Upstart went through an old high at 72 and change. I went long Upstart at 74, and I believe, I'm not sure where it closed today. I think it closed at 85. Give me a second, and I'll let you guys know. But yeah, so I'm long. I lost 2 points, 3 points on Rev. And on Upstart, I'm just looking for the close right now. I'm wrong. Upstart closed at 91. I went long at 72, and that was last week when I told you guys. But again, I think it's all about the industry that Upstart's in. And I'll tell you why. Now, Upstart, Upstart is artificial intelligence. It didn't happen today, but yesterday, C3 AI, another artificial intelligence stock, took off and ran, had a really big day. So I wasn't surprised that there was a follow through on Upstart, which is the one I have. So C3A1, traded that one too, but I liked Upstart better in terms of ways trading. I went long today, Affirm, AFRM. So I went long Affirm today. I went long, I went long yesterday. Get my days right. Yesterday on the close. I went long, if I remember correctly, my average cost I think is around 130, 131. And stock ran to 144 and change. And then again today it ran up to 147, 148, set another new high. Ended up closing at 136, but I'm long that one. Again, artificial intelligence and money lending. So those are the stocks that I'm in. So let me just tell you, which you guys know, I always tell you what I'm doing and what I think and give you my opinions. Now, the other thing is, so I went long Affirm today, AFRM, yesterday, so those are trading well. Now, coming to market, and these are going to be interesting because you're seeing some type of follow through, and I'm not sure who's what, and I'll explain what I mean by that. Coming to market tonight for tomorrow is Bumble Incorporated. I call it Bumblebee. Bumble Incorporated, which is the dating app, and the way they tout themselves is they're the one, the women approach the men first. So it's a dating app geared towards women. Again, I'm not getting into all that. Deal looks like it's oversubscribed, looks like it's going to be up several points. The thing I wanted to tell you about is MATCH, match. One of the things I do when I look at these stocks, I also like to look at who's in the market, who the competitors are, how they rank against competitors. And so I looked up Match. For those who've not looked at Match, and I don't know how, I know how, I should take that back. I know what I did. Match has basically been in an upward trend since it went public. I'm going to a monthly chart, so bear with me 1 second. It's been an upward trend since they went public back in 2016. I'm looking at a monthly chart. I'm gonna switch it to a weekly. And this chart looks like something that you say, how come I didn't own it? And I already know what happened with me. What happened with me is I prejudiced myself. I'm like, it's a match app. You know, how popular these things, how are people dating? You know, that doesn't make sense to me. I'm not sure this is popular. So of course, me and my ultimate wisdom, thinking it through like I did just now, said, I'm not buying it. So I didn't buy the stock. And what I'm showing you now is that Match is at an all-time high at 171 bucks. Let me see what I can give you here. Over the last over the last week, the stock has basically gone from 141 to 171. So you get a 30-point move on a $140 stock, you get a 30-point move. That's not bad. The thing I'm looking at, though, and this is why I bring it up, is Match is a direct competitor of Bumble. All right, so you get an idea of, now Match is a lot bigger than Bumble, but you get an idea of what's going on. I believe that part of this run in Match is coming from the fact of what happened in Bumble, that Bumble's going public. I mean, when Match released earnings, I'm looking at the earnings right now. When Match released earnings, actually, which a lot of companies are doing right now for earnings calls, is that they're falling down. In other words, there's no follow through. They're beating numbers. They're doing well. Companies reporting good numbers. You're looking for follow through. The stock rockets before the numbers announced. The number announces, aftermarket trading goes a little high, and the next day it's opened up and it's coming down. But it's probably a buying opportunity because after it comes down a little bit, the stock takes off, and that's what Match did. Now, some of you heard me say this before because I own the stock. I told you I brought it last quarter. I know I'm jumping here a little bit, but you'll understand why. And it was ServiceNow. And ServiceNow reported earnings. They had a great quarter. All right, let me say this again. They had a great quarter. And the stock sold off from 550 as low as 510 before it rallied back. And now it's basically, again, went to an all-time high. So my only point saying this to you is that there's not much follow-through on these things in terms of earnings. But if the company has good numbers and blows out the number, once the fast money that's trading this gets out the way, the stock has been shown to run. You have to have patience. In the past, the stock would run the same day or the next day. In other words, earnings would come out, beat the number, blow it out, stock would go up. The following day, it would keep going up for 2 or 3 days. What we're seeing now is that because of the aftermarket trading and because of, I guess, the impatience of younger investors, newer investors, I shouldn't say young in terms of age, but newer to the marketplace, that after the stock opens up and reports earnings, if it goes high, they're taking their profits. They're taking their profits and cutting their losses and then moving on to the next earnings play. They're not having the patience. So my comment to you guys is, if you play these and have patience, you'll be fine. In fact, I recommend right now not even trading these stocks ahead of earnings. I would buy them after the earnings. The market seems right now to be giving you plenty of time to buy them after the earnings when they beat. And when they beat, they beat. Now, some companies, who was it? Can't remember. Somebody beat the number. United, symbol's U. Hold on, let me get the name. It's another IPO that we traded. Unity Software Inc. We call it Unity Software Inc. Again, blew out the number for earnings and revenue, gave a weak forward guidance. Stock closed that day at 150 after earnings came out. The next day, the stock opened up at about 135, and right now it's been as low as 125, and today it closed at 127. So the thing you got to look for is, one, you got to look for the numbers, and then two, which has a big important, is what management's saying about guidance. And that guidance comes from the conference call. All right, so I know I deviated from it, but again, Bumble Inc. is in the same industry as Match, and they ran Match up. Like I said, I expect Bumblebee to be up. They've been talking about it. They've been touting it. The insiders are not selling any stock during the deal. I'm just double checking my notes. I think I'm right. The insiders are not selling any stock, but I'll have to check on that. So you have that coming tonight for tomorrow. Signify Health is also an IPO coming tonight for tomorrow. Should be up a couple of points. And the other one is Apria. Apria is coming tonight. I believe it's tonight for tomorrow. And that one should also be up a couple of points. So the IPO market is heating up. They're bringing a lot of new product to the marketplace. And I think there's some opportunity there for us to make some money in this. In fact, I know. I know there's an opportunity there for us to make some money. All right. So let's see. I covered that. I covered my IPO stock. All right. I have covered everything I have. And I'm looking for questions. I'm just looking through. I don't see any questions I didn't answer. So I will look at it. All right. So I don't have any more questions. All right. I will bring up a couple other things that have been somewhat being talked about. And that is, I'll take a look at it. I'll take a look at it, Paul. Some of the things that are being talked about right now is the fact that cryptocurrencies, are they legit? I know that the SEC has basically said that the cryptocurrencies is a threat to defense or something to that nature, and they're not viewing it as a currency. Like the marijuana stocks, the cryptocurrencies are here to stay. All right, it's just that simple. People like me who don't understand how to put a value on this fundamentally, I'm gonna have to get over it. It's not going anywhere. And this seems to be the model of how it's gonna run, and it's based on pure supply and demand. I had this conversation with somebody else the other day. If you wanna get an understanding of cryptos, I think the best thing to look at is gold. Gold, like cryptos, has no basic underlying fundamentals. Now, you'll hear some people say, well, basically it's about mining gold and how much gold we can pull out and do with gold. The bottom line is gold is a supply and demand asset, all right? Gold's not an industrial metal. I mean, it's used in catalytic converters, but the amount that's being used is not significant. And the second thing is, moving forward, I gotta believe with electronic cars, catalytic converters are gonna be changing dramatically. So it's just a totally, and again, I don't even know if an electric car has a catalytic converter. I'm just saying that what we know as a catalytic converter on our cars today will not work on an electric car. So with all that said, the only thing that really makes gold go high is when people want to buy it, when demand increases. And the reason why demand increases is because they look at it as something to counter inflation. I'm not getting into all that, but all I'm saying to you is gold does not produce anything. In fact, it costs you money to hold it, to store it. All right. There is no value in gold other than what someone else is willing to pay you for it. So the value comes from, perceived value comes from somebody else wanting to buy it and what they're willing to pay for it. The cryptos work the exact same way. Now, I'm not getting into the mechanics, but think about it. The only thing that's driving up the price of a crypto is the fact that people want to buy it and they're willing to pay more than what it's selling for or what you paid for it. I mean, that's just as simple. And when cryptos go down, it's because you have more sellers than buyers. All right, it's just that simple. There's nothing fundamentally around it. There's no fundamentals on it. So all I'm saying to you again, would I trade the cryptos? Yeah, when I was younger, I would have traded them. There's no doubt in my mind. I would have traded them. Is it a long-term investment? I can't answer that. I really can't. It's an island in itself. It's out there, and what I mean by that island in itself, there's no fundamentals behind it. So I'm not sure what's driving the value. It is supply and demand, but what makes one crypto a higher demand than the other? And that's why I'm kind of lost. And it looks like right now that everyone's just jumping on Bitcoin. Bitcoin seems to be the most popular one that seems to be the most first to market. But let me just say this to you. First to market does not mean you're going to last long term. In fact, I can name several companies that were first to market that were eventually just blown by the market. And one that comes to mind right now is AOL, America Online. 20 years ago, actually even further than that. But when the internet first was introduced to us, AOL, America Online, had 3 times the number of subscribers as the company that had second place, which was Netscape. AOL had 3 times the number of subscribers. All right. the stock was it was the darling on Wall Street. Now you look where we're at now, AOL doesn't even exist anymore. All right? First to market, Netscape doesn't exist. Some of them went out of business. AOL merged with Time Warner, then fell apart. But again, you get the idea. I think that's going to happen with the cryptos. So who's going to be left standing in 3, 4, 5, 10 years from now? I don't know. They will be left standing though. Some of them will be here. All right. I just don't know who. I don't know where to place your bet. In short term though, I would speculate on it. Now I had a question on Vroom. Vroom's been running the last couple of days. I'm not sure why. It's not a stock I follow. And it's interesting. I take that back. It's not a stock I follow in terms of events. I'll tell you why. Vroom went IPO back in July 2020. I thought the stock had a chance to really run. Stock was priced, opened up, and basically ran. But then since basically August of last year, the stock's just done nothing but come straight down until the last 2 or 3 days here. And it has a run with some volume behind it. I have no idea what's making it run, Paul. But the one thing I can say is that I had to go to a bigger chart. But I just need to zoom out a little bit so I can see more. I would say right now, Vroom has just entered into a trading range between 48 and 52. It's been in this trading range back in September last year. It also hit this trading range back in July last year. So this is a major area for it. It's got to fight through that. If it fights through the 52, I would expect it to trade up to and challenge the 58.60 range. But in general, a lot of work in here. Let me add something for you guys. And this is me. So I'm going to say a couple things here. One, there are 1,000 ways to make money in the market. All right. I heard somebody tell me about a strategy they're doing. I'm like, wow, never thought about that. Pretty ingenious. So all I'm saying to you is there's 1,000 ways to make money. I also heard a guy tell me that he only buys stocks after they've fallen down. He's a bottom fisher. And he said he's been very successful at it. And he said he never buys a stock at or near its all-time high. And for those who know me, I'm the complete opposite. I do not buy stocks when they drop. I don't believe in, this is me, I don't believe in putting money into something that's going down. If I'm going to hold the stock, I'll wait. If the stock starts to run again, I'll add to the position. I'll give you a prime example. PLTR, Palantir. As you guys know, I own it at 15. I brought some more stock at a new high when it went through 30. And I brought some more stock when it went to another new high at 45. I averaged up. Stock's doing great for me. I averaged up. I don't average down. When stocks go down, I know the saying, buy on the dips. My problem is not all stocks recover from the dip. So a lot has to do with the quality of the company you're buying. And the other thing too is this guy loved his penny stocks, which also make me cringe. He loves his penny stocks because he wants to be the big guy that with 1,000 shares of $1 stock or 5,000 shares of a 25-cent stock and watch it move. And he's done well with it, so God bless him. All I can say to you is that doesn't work for me. I've seen too much stock manipulation in the penny stock market, and, AKA the Stratton Oakmonts of the world. So I'm not a big fan of that. All right. So again, understand what it is that you're doing. Vroom, Paul, I wouldn't touch it. It's trading, caught in those trading ranges. Ugly chart. If anything, again, this is Milligan. Call me up when the stock goes through 73 and gets through all this muck and all this other stuff that I'm looking at. Not a pretty chart. Not at all. In fact, I think it's on my IPO watch list. I'm going to look now, and if it is, I'm taking it off. Yep, there it is. So I'm going to take it off, Paul. Thank you for letting me know that. You're probably looking at me saying, wow, Milligan's crazy. I just took it off. Chart looks really awful. All right, any other stocks you guys want me to look at real quick? Any other stocks? Thoughts on SNDL? Well, I haven't looked at that one in years either. Long time. I shouldn't say years, but... I'm not sure I'll put that up there, but I am laughing at you. And the reason why I'm laughing at you is you brought me another penny stock. Now, here's what's interesting. Stock went public back in August 2019. All right. Traded as high as $13 a share. It's done nothing but come straight down. It went from $13 a share down to 20 cents in a matter of, let me get this right now. That was what? It went public it went public August 1st, at the beginning of August, and hit that number of 22 cents November 20th. All right, so that's what you're looking at. So I'm just looking at the overall trend. And again, I don't know who this is or what it is, but you got some gaps in here between from $1.70 to $1.90, $2. You got a big gap, and then it ran to $2.95. I have no idea what to do with this. I wouldn't touch it. If you know something, if the guys are forcing it, if you got that call off or Reddit or one of those guys, go for it. But other than that, I wouldn't. Well, I take that back. I shouldn't say that. What I mean by that is I need to know why the stock ran from $1.20 to $2.90, $3. What happened? Was there some type of news, new product, new drug? What'd they do? All right. I'm going to answer your question on Bumblebee, David. The only thing I want to say is, and I know a lot of you heard me say this before, and for the newer people, maybe new to trading and new to investing, the question you always got to ask yourself is, what's driving value? Why this move? What's going on? All right. If you're just buying based upon moves in volume, and price, that's okay, but you're subbing yourself the risk because you don't know why it moved. If you don't know why it went up, you're not going to know why it's going down. So one of the things I'd say to you is you want to know why the stock is going high. What's driving it? Uh-oh, Richard, are you the one trading this? Did you put up SNDL? Richard's not answering me. I'm looking now. So I'm not sure. So, all right, I'll talk about it. I'm just looking at Richard's comment. Oh, Daniel. Okay, cool. I saw Richard talk about that he made some money in it. Brought it 50 cents and sold it 2.30. Is that you, Richard? Nice trade, Richard. Oh, no, I'm sorry. That's Daniel. Nice trade, Daniel. So at some point, Daniel, you need to tell us what made you buy the stock at 50 cents. Where'd that come from? What are you seeing? Or what did you hear? Richard, you said you brought it, 85 cents and sold it at 2.10? Marijuana push? All right. Sold today. So you guys are trading this good. You follow my warning. Please take profit, take profits, take profits. David, I think that Bumble is going to be okay. As I just said, I looked at Match and what Match is doing. Bumble has better margins, but Bumble actually was losing money, but Bumble has better margins. They're expected to make money this year coming forward. And based upon some other valuation ratios, Bumble's actually probably going to be a little cheaper than who else is in the sector. In fact, hold on a second. Where'd I put I wrote some notes on Bumble. Bumble. Come on, where you at, Bumble? I'm looking, of course, I can never find what I'm looking for. Wow, so I got everything up here but Bumble. What'd I do? I must have closed Bumble out. I must have deleted Bumble. I thought I kept it. Or is that it? Nope, that's not it. All right, so I apologize. I don't have the Bumble in front of me. But again, just going off my recollection, Bumble had better margins. It's a much smaller company than Match, better margins. And based on price to sales, that ratio, it's actually undervalued compared to the rest of the companies in this sector based on a $29, $30 pricing. And I think that's the range. How it trades afterwards, I don't know. I'll be watching it, but I don't know. All right, I'm sorry. I'm looking at two things at once. All right, so that's what I would do. Bumble, Bumble's going to work out. If you have IPO stock, it's probably going to trade really well. I would not be selling on the opening. None of these IPOs seem to be falling down on the opening, so the opening is going to be good for you. If the stock opens at a premium, hold it a little longer and let it go. If the stock for some reason opens up at a price below where it's IPO'd at, the IPO price, then go short. But I don't think it's going to open up down there. Let's see, what else? So you guys now are talking about Stock Lizard and SNL? Okay, cool. Something else I'm going to tell you. Forgot that quick, but you guys asked me. Christian. So again, I went over, Christian, just so you know, I went over some stocks that I traded. Last week we talked about Upstart. So I went long Upstart. I got squeezed out of my short in RevMed, RVMD. I'm still long Upstart. I just purchased Affirm AFRM. I just purchased that on the close yesterday. I brought some of that. I started, just so you guys know, I started to short, believe it or not, 2 stocks, and I didn't short them. One was Wynn. The Wynn, the casinos went public. Deal was priced in the hole. I did not short it. It's bounced back because of what's happening with gaming, but I did not short it. It would have been a great short. The other one that I just did not have time to do today because I just got busy, and I'm not a big fan of the company, but I'll let it go, was Leslie Pool, LESL. Again, when these companies announce these secondaries, you can see the stock coming in when investment bankers are pulling it down. So I would, in fact, I'm going to look at shorting Leslie tomorrow, probably on the opening. There's several IPOs coming tonight for tomorrow, some really big ones, some names. And these are companies that went public not too long ago that are due to come out and do secondaries. All right. Let's see what else. All right. Somebody asked me something in here that I saw. Oh, there it is. All right. Hold on a second. AARK. Oh, I'm sorry. ARKK. ARKK. ARKF ETF. So since I don't know what they do, I'm going by pure chart. And I don't know what they do, but I'm looking at the chart since back in March 2020 when we had the big sell-off. And this is a chart that just looks like, as I call them, stairways to heaven. Basically nice steps. So it goes up, consolidates, then goes up again. I'm sorry, I'm not in front. Consolidates, then goes up again, consolidates. So I'm gonna switch it to a daily chart. Beautiful chart. If you guys wanna see what a chart looks like that when a stock is going in an upward trend and off a heavy volume, this is it. Again, I don't know what they do. I don't know too much about the company. I'm gonna zoom in a little closer. Yeah. And you had a breakout. That breakout from 150 to 158, which happened, 2 or 3 days ago on the 8th. That breakout was significant. You had some profit taking, but anybody that's done technical analysis know that's called the Fibonacci's, the fibs. You're looking for a retracement. So you have a breakout from 150 to 157, 7 points. You expect a 3 to 4 point pullback, which it did. For those who own it, I'm not contradicting myself. For those who own it and like it and want to be a long-term investor, I would buy some down here. I would add to my position. I wouldn't go more than what my position is. So if you're long 100 shares, I'd go long another 100 shares. If you're long 1,000, I'd go long maybe another 500 or 1,000. I would not go larger than what I initially have. I would just add to it. But it's definitely an upward trend. I would stay with it. Somebody said I'm long ARK. ARK's chart reminds me of Adobe. Yeah, I mean, this is it. The biggest thing with this right now is just the patience. I have no idea what they do, but you know what? I'm not too proud to say I'm about to write this down, which I'm doing right now with my red pen. Red pen means it's going to be looked at. And I'm going to look at ARKK and dig myself in a little bit more. I never heard of Kathy Wood. Um, but first and foremost, Troy, thank you so much. What's up, Troy? No, I'm not familiar with Kathy Woods. But Troy, I'm bad with names. That's why I give everyone a nickname, because I can't remember their real name. So I give them nicknames. I confess. So I might have heard of her and not even known it. But I'm gonna look it up. And so you guys, evidently a lot of people like Kathy Woods, so I'm gonna have to look Kathy Woods up. I'm writing that down too. Or maybe I'll just call you, Troy, and get information from you. Kathy Woods. All right. She's the GOAT. All right, cool. I like goats. Oh, what I was going to say was this, and I know I'm redundant, but I got to say it. One of the things you guys, especially who's new to this, one of the things you got to always look for is a catalyst. One of the things you guys got to ask yourself is, what's driving this up? All right. When you understand what's driving it up, it'll help you understand when to get out. It'll help you understand when you're wrong and when you're right. But first and foremost, what's driving us? So I'm not picking on ARKK. I don't know the company. I'm not picking on it. But the first thing I'm going to look at is, when I look at the company, I'm like, what's driving this thing? Why do people want to own it? What is this company doing that's increasing the value that much where the stock's running like it is now? That's a question you always got to ask yourself. That's the question I asked on GameStop. What's driving this? And there's nothing fundamentally driving that value, which means that, again, I know I'm redundant, which means that once the buying stops, the stock's coming down. There's no value there. Value is your support. Value is your base. If there's no value, you have no base. A house built on a weak foundation is going to fall. If this stock is running off a weak foundation, which means weak fundamentals, there's nothing there, it's going to fall. It has to fall. And the companies that crashed, I'm going to say the word crashed, back in March 2020, the companies that crashed, the quality ones came back. The crappy ones are still down. But the really good ones that have a legitimate product and service that people want and need, they came back. So one of the things you got to ask yourself when you start trading these things, and if you're doing pure technical, I know you don't care what the fundamentals are, but if you're pure technical, I'm going to tell you from somebody who was pure technical, you want to understand the fundamentals. Doesn't mean you're buying them based on fundamentals, but you'll have a better understanding of the company. And what I mean by that is, if you did any type of research and studying, I'm going back, into Amazon or Google, when you were trading it, anytime you saw weakness in a pullback, you saw that as opportunity to trade and buy the stock higher. All right? Because you knew that the company was legit. You knew that the fundamentals were there. You knew they were going to drive value. You knew it. Then on the other side, let's flip sides. Let's go to Crocs, the shoes that everyone likes. All right? No offense to Croc. What's driving value? Are more people wearing Crocs now because they're indoors? I don't know. Are more people wearing Crocs because they got a new color? Crocs hasn't done anything to drive value. I'm going to look at the stock right now. I forget, even got the symbol. It's been so long. Was it KR? No, that's Kroger. KR, what's Crocs? I can't remember. That's how much I've out of touch with this company. So if anybody remembers the symbol on Crocs, just type it in so I can see it. I'll take a look at the chart. But you get my point. There's nothing driving value for Crocs. Nothing. And that's why the stock does not do anything. All right. And if you're trading it, guess what? Now, if I'm trading Crocs, if I'm looking at Crocs, thank you. If I'm looking at Crocs, guess what? I'm playing it to the short side. Why? Why would I play it to the short side? Because fundamentally, there's nothing there. Now, as I said, I'm looking at this chart and the stock is straight up. So I guess you guys do like your Crocs. Look at that. Whew. Crocs is making a move. Based upon what? I have no idea. So now you're saying Professor Milligan has no idea what he's talking about. Yeah, I got no idea what I'm talking about when it comes to this. I don't see any reason why I want to buy Crocs. So I guess I'm wrong. And it looks like I'm just looking. Yeah, they okay. They beat earnings, and they got earnings due on the 4th, March 4th. So we'll see how it happens. But they beat earnings. The last couple of quarters, I'm looking. Yeah, they've been beating earnings. That's what's going on. That's what's driving the stock. So I take that back. So when I go into Big Five and I see all those Crocs on the shelf and everything, I'm going, wow. Is that what happened? Reddick has a short squeeze on Crocs? When would you know to sell a stock like SNDL? You know, I have no answer for you. I guess the thing I would say to you is that I like that Reddick short squeeze on Croc. I guess the thing I would say to you is that bulls make money, bears make money, pigs get slaughtered. I know you're being sarcastic, David. Bulls make money, bears make money. And I wouldn't be greedy. But the other thing I would say to you is this is a trading vehicle. It's not a long-term hold. So at some point when you think you've had enough profit, it's extended enough, I would take my money and go. There's no question. Again, I don't know why it's run up. I have no idea why it's run up. But the one thing I will say is you got a big gap in here, and typically they come back and fill the gap. The other thing, if we just go by pure Fibonacci's from 140 to $3 is what, a $1.60 move. So 80 cents pullback from 290 would bring you down to $2, which is right around where the fibs are. So right now, I'm not surprised. I'm surprised it's up here, but there's a gap here. And that's where the fibs are. There's a gap right in here that's going to probably come back and fill. What else? So, that could be it. Oh, what's this? So Crocs had a partnership with celebrities like Bieber. Is that what's going on? Justin Bieber's got all you guys wearing Crocs now? All right, that explains it. But again, that's a catalyst. Understand what I just said. I asked you what's the catalyst that's driving value. I said, when you find the catalyst, you'll find, when you understand what's driving value, you'll also understand when you should sell it. So now what the thing is, what you look at Crocs is starting to move now from what I'm seeing is because of their partnerships with celebrities that are wearing Crocs, and people now are saying, well, if Justin Bieber can wear Crocs, I can wear Crocs. Okay. Now the question you got to ask yourself, two things. One, how long will that last? And two, the duration of the catalyst and how significant is the catalyst. So it looks like it is significant. So the thing I would watch with Crocs is I would watch for sales to start slowing down. I'd watch for when the excitement is over about the celebrities. So I'd keep an eye on that. So that's that. Let's see now. But short squeeze on Crocs, no. Justin Bieber. One of the things, I'm looking at my time because you guys know I can't go over over an hour, because then what happens is I have problems with the recording. When I look at SNDL, the thing that I want you guys to remember is this. You're trading a stock, all right? So if you're trading a stock, one of the things that I always do, and you've heard me talk about this before, when I take a position, I typically have two prices in mind. I have my price to the upside, which is my target price, the reason why I brought the stock in the first place. And to the downside, I have where I'm going to put my stop loss or where I'm going to sell it. I always have those two numbers in my head every time I buy a stock. If the stock hits my downside, I'm out. I'm gone. It's not emotional. It's a vehicle. It's a tool. If I pull a screwdriver out of my toolbox and it's broken or the handle's broken and I can't use it, I'm going to throw it away. If I pull out the wrong tool, I'm going to put it back and go find the right one. But I'm not going to pull out the wrong tool and say, well, it's the wrong tool, but guess what? I'm going to make it work anyway. I'm going to hold on to it. All right? So first and foremost, the thing you got to ask yourself is, what's driving the stock? Once you figure out what's driving the value, when that stops, the question you got to ask yourself, you're going to be in it. Now, if my stock hits the upside, all right, if it hits the upside, what I do then is I reevaluate my two price targets. I put another price target to the upside, and I put another stop loss or sell to the downside. And whichever one happens first, I'm out. Just that simple. No emotion. As my position, my profits get bigger and bigger. If my profits get larger, I'll raise my stop, but I'll give the stock more leeway to the downside because I'm giving it a chance to breathe. If you look at Paltair, I own the stock at $14, $13, $14. So when the stock goes to 45 and then pulls back to 35, guess what? I'm okay. I'm okay. I mean, I doubled my money in less than what? Less than 6 months? Is this making sense? I hope it's making sense. I hope it's making sense. So all I'm saying to you guys is, I call it my binomial. Binomial buy. So when I buy a stock, I call it my binomial sell side, which means I got 2 targets. And I'm disciplined enough to sit with my targets. You got to be disciplined. All right. If you're wrong, you can always go back in. But if you're right, you're going to make some money. How much above my entry point? Where I think it's going to go. In other words, at least 10%. I don't buy a stock to make a point. I'm not buying a stock to make 1%. If I'm buying a stock at 100, it's because I think the stock can go to 120, 130 soon, near term, not a year from now. All right. So I'm looking for aggressive growth in stocks. All right. Not speculation, but aggressive growth. That's why the ARKK look really interesting to me. I look at those type of things. I'm all over those. I'm all over those. The hardest thing with ARKK is basically trying to figure out the right price to get in. And by the way, before I forget, because I'm looking at my time, FVRR. It's another one that kind of fits that mold as ARKK. One of my former students brought this to my attention. And by the way, I can't give it to you, but he wrote a 12, 13-page report that if you're interested in the stock, it's a report you should read. But again, I cannot send it to you. It's not mine to send. And he works for a firm, so I'm not sure what he can do with it. I didn't see him. Ham, are you on today? For those of you who know Ham is, talk to Ham. Ham's got the report. Ham, I don't think you're here today. If you are, let me know if I can send it to him. If not, I respect you and what you've done with it. But again, all I'm saying to you, after reading I already liked the stock. He showed it to me. After reading his report, if you're an investor looking for something to invest in long term, I think Ham's got a winner here for you. All right, one other thing. Well, I can't. Nope, I went the wrong way. I'm just looking at a chart, I'm trying to get all the chart in one page so I can see what's going on. All right. I'm looking now. My time is up. Paul, let me check with Ham and see if I can send you the report. And if I can, knowing him, he'll probably say no problem. If I can, no problem. I'll email it out to you. The rest of you guys, again, I have to hear from Ham. Or if you guys know Ham, Ham's usually on the call. So if he's not here, he's probably working. But again, those who know Ham, he's on social media. I'm quite sure if you ask him for it, he'll send it to you. Really good report. Oh, Ham, you are on. You just not saying anything. Maybe you have it turned on and you went somewhere. But Ham was on here. All right, guys, I got to hop. I appreciate you. Thank you so much for all your help. You guys help me. You keep me in the market. You keep me excited about it. Let's go make some money. I had a good day today, but yesterday was a bad day. The other day, all my shorts went up and all my longs went down. As a trader, people who trade understand those are the days you sit there and you go, I can't believe it. All my shorts are up and all my longs are down. Really? But it happens that way. So, but I had a good day today, and made back what I had and so forth. So I can't complain. That's the nature of our beast. It's the nature of what we do. All right. Miss you guys. Have a good one. And I'll see you next Wednesday.